Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon, good evening, and welcome to Technical Analysis Explained. I'll be your host, Tom Schneider, CMT with NinjaTrader. And here at Technical Analysis Explained, we like to delve into different ideas, different topics regarding technical analysis, kind of a deep dive in maybe an indicator or some theories. Today is no different. Today we're going into common technical patterns. So when we think about patterns, kind of one of the first things that people can really associate with when they start learning technical analysis, because it's very easy to recognize these patterns once you've learned what they are, once you've become accustomed to that. And as we're very visual creatures, right? We look at things, and when we see those patterns, and it doesn't have to be the markets, it could be anything in life. When you start to see the same patterns repeating, kind of get predisposed to looking for those patterns. So today we're going to go through some of the most common patterns, I would say, that you might run across in your trading. And we'll go through why they work. And they all are based on kind of the same principle that when humans are doing a procedure, they're acting a certain way, they tend to react the same way in the same set of circumstances. So it's just a behavioral thing. You know, we like to think of sometimes technical analysis, there's a little bit of math, there's a little bit of functions going on. But the reason for that is because as humans, we are creatures of habit, and we tend to react the same way given the same set of circumstances. So with that kind of underpinning everything we're doing, you'll hear maybe some of the same reasons in different patterns. So let's take a look at what I call probably the easiest pattern to recognize, and it's a double top. So a double top, and for a lot of these patterns, there will be a complementary pattern, which is just the reverse or the opposite of what I'm talking about. So I'm not going to go through every pattern example. If I show you an example of, let's say, a double top, you can understand that the same forces work with a double bottom, just flipped. So let's take a look at the double top. And I'm going to do something we don't usually do during our regular shows, but we're going to use more of an annotation outside of the NinjaTrader platform. Makes it easier for me to point these out. So a double top is when you have buyers coming in and they're pushing the market up, 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 and then it gets to a point where there are no more sellers. There are no more sellers. There are no more buyers buying above this point, right? Buyers dry up. They don't want to pay for this market any higher. Sellers would love to have that, but sellers are not able to be matched with buyers because buyers are running out. So there's a thrust up, and it indicates a reverse, right? There's a reversal. There's you might call it a retraction or a slight reversal. But then the double top part of it comes into it when the market gets to about the same place. Okay. Now you can see that this wick right here got a little bit higher, and it really doesn't. I'm not going to stress which markets these are. This is an example from gold. I don't have the watermark on because I want you to focus on the patterns. But what becomes evident when we start to retrace from this area that we were testing before and failed, we test it again and fail again. Now I want to look at where did this, where did it go down between these 2 points? Where is the low between those 2 points? And I'm just going to grab a horizontal line from my NinjaTrader and say, well, it's about right there. Okay. So this is considered maybe a breakdown line, right? When we have a test up here and then a retracement and then another test and then a failure, that level becomes very important. And what we're looking for then is a breakdown below this line, below this level. Wherever we retrace to, we want to get there again and think that might fail, right? And if it fails, what can we expect? What can we look for? Well, we can look for continuation through, but there's one other piece of this, that there's a possible retest of this line. So think about it like this. You've identified one top, two tops. Now after this, you've identified this neckline. It continues tracing towards this neckline. We break that neckline. This could become, as a trader, this could become a stop. Now, this is a daily chart, but this pattern certainly same dynamics are happening on the intraday. If this is a 1 minute chart, same dynamics are happening. So when we start to break down, this level to me becomes, if you're short, a nice stop, right? That we might test. We didn't get back to it and we continued on down. So the double top is important, not just to know where did we go up at the top and where did we find a place that was difficult to get through, but it's also important to know where it retraced to between those two tops, because if it isn't indeed a reversal pattern, then that gives us an area of interest. And look how backward looking this is, right? When we retraced, where did it go to? Just happened to be the level before that we tested and tested again. So, and you might even say there's a mini double top here, although those moves were pretty big. We didn't even test that neckline or that breakout line, but certainly two areas of interest really compressed. These are a little bit more spaced out. It might take a little more time to get back up and test that level, but it fails. So double tops are important, not just for where they stop on the top, but where they were confined to on the bottom between. And we can hold that in the back of our mind going forward. That's the double top. Another, and of course, the bottom works the same way. If we were to have a double bottom, we'd look for how far the market rose up to as an area that we want to break through and then potentially hold as support the other way. Now, if there's a double top, there's a triple top. Let me get rid of these annotations. They're just kind of floating on my screen. They're not attached to any chart. So let me just get rid of those annotations. See if I can do that. Bear with me 1 minute. This is the first time I'm using this, so I'm not as skilled. So here's what we have. This is really interesting, I think. This is a different market. We've got a triple top going on. So if I look at the triple top, you could say this area right here was the first test. This area here was the second test. And we tried to get up there one more time and we failed. Now what's happening between those 3 points? Well, we've got an area here that we traded down to and an area here that we traded down to. So we can take our horizontal line again from the NinjaTrader platform, and we can just put a horizontal line there. And we can say, wow, look at this. This is interesting. It retraced down here, couldn't get quite past this level. Retraced down here, couldn't quite get past this level one more time. And when it broke down, it continued that downward trend, but where did it retrace to? Right at that horizontal line. So it's the same concept. It's one extra peak. The breakdown and the breakout or breakdown in this case, the follow through, the test again, and then the real follow through, the confirmation, if you will. Some people think that because there's 3 tops, it might be a little bit more, the probabilities are higher that it'll continue down. I don't know if that's always true. You know, you might find the one time that it isn't, but certainly the triple top, the more you test and fail, uh, the 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 greater chance I think that you'll have going the opposite way. So a triple top is just one more piece of evidence over a double top that there could be a reversal. And it does take a little bit longer to fill out, to form. That's just the nature of trading. So those are kind of easy to see once you see them, right? Because you can picture, where is this market stopping? Look, there's a peak here. Try to get there again. So I wouldn't say this is a quadruple top. There's different data or different trading going on here, but so close together, I think that's a nice triple top. Let's go over to a different chart. Let's look at another one that's a little bit longer. This is called a cup and saucer. And the nice thing about some of these patterns, and again, let me get back to my annotations because it's funny when the annotations float over and we can clear them on the new chart. Cup and saucer, again, it's kind of a quick and easy name to remember, you know, very vivid what a cup and saucer might look like, right? Or cup and handle is really what it is. I call it cup and saucer, cup and handle, but it's a longer term pattern. Okay, it's not a quick pattern. It's a long-term pattern. And this pattern tends to be somewhat of a reversal pattern. Doesn't always have to be. But what it is, it's basically a shallow changing of a trend that comes back to almost where it started, right? Or where it started. So you can picture this is the cup. Where's the handle? I kind of drew that a little bit weird. I should have gone right to the point because the handle is right here. And going back to the NinjaTrader platform, we're going to grab a horizontal line again. You can kind of see this area right here is the top of the cup and the handle comes back. Now what's going on here? Let me turn off these crosshairs real quick. So it's a slow basing pattern. You've got a downward trend that eventually you have a shift in those peaks and lows, right? You're not making lower lows anymore. Here's where that changed. Yeah, now you're starting to make higher peak highs instead of lower peak highs. You could argue this was a higher peak high from that, of course, but it's a long-term trend. You need more of those. You can't just have one to say this is a reversal pattern because you can see it retrace. But you start to see more and more higher lows, higher peak lows, higher peak highs until its trend is completely changed. This is kind of the opposite or a different situation than, let's say, what we call a V-shaped recovery, a V-shaped reversal. V is stark, you know, a very downward sloping move and a downward upward, or a very sharp upward moving trend. This is not that. This is a very slow burn. This is a very slow trend change. But here's the key. When it reverses, when we hit that peak and it reverses and it continues on, we're looking for that reversal to get back up to that cup line, if you will. And so when it does, okay, what happens after? We've got a breakout. What happened? It came back down and it tested this cup line and it bounced off. So if you had picked out this reversal pattern, you would see, wow, this is a really nice cup and handles pattern. You might realize that when we break out, at some point, we might revisit this level. And that's exactly what we did. And we trended up again. So that's the cup and handle. It's not a real short-term trend or pattern, rather. It's a longer-term pattern. A lot of times you'll see it on daily, weekly, monthly charts, and it's more of a bigger look at the market. but these levels can be just as important. Can you imagine looking at this chart on a daily chart, this pattern on a daily chart, but knowing on this day as we're trending down what that level is? So if you think, wow, this market can't get any lower, you say, well, I think it can get to here. And, does it happen on this day? No, but it happened on this day and it happened on this day. And you could be king of the trading room, queen of the trading room, if you knew that and said, wow, I think that. Now, of course, past performance, not indicative of future results. Doesn't always happen that way, right? It might get near, but it doesn't go all the way. It might extend past and then correct. It might extend past and continue down. But understanding that this level at some point in time might be revisited, you can use that to your advantage as a trader. But I want to talk about one of the, I won't say most important, but certainly one of the most powerful patterns. And powerful because it does, it has the highest probability of being successful. So let me go back and turn on that annotation. We can turn off the cup and handle. Let me do that. Clear all the drawings. And let's look for this head and shoulders pattern. I'm going to turn that off just for the moment so I can highlight this. And I think Jim and I talked about this on one of the opening range shows that we did together. And this is not a textbook example. This is not perfect. And that's fine. Okay. Some examples will have little aberrations, but the thought behind it is still the same. Now, what I see here with the head and shoulders is we have, and I'll turn back those annotations because I need to switch between the two with my platform and my presentation software. But head and shoulders sounds exactly like the name, right? You see my head, I have two shoulders. The market has the same. So I'm going to highlight this shoulder. We're going to stretch it. This is really kind of like a two-hump shoulder. And then we're going to go up here and mark the head. And again, this is rough, but this is what we have. And then another shoulder here. Now, I'm going to switch back to my NinjaTrader platform and draw a horizontal line in just a moment. But here's what's happening. Market trying to extend this bullish move. And it gets so far and again, buyers run out. Market comes back down. Sellers, wait a minute. We do want to sell. We're just going to sell a little lower price. Buyers are holding out. Buyers are saying, fine, we're gonna buy when it's lower. What happens here? Sellers run out. Buyers are the ones that, hey, wait a minute, we want to buy this market. Something's changed. And I can't tell you what happened to this market on this date. Okay. Now it did get back up there again and come back down. So I'm going to treat this as one shoulder, even though it looks like two on one side. Now, market comes back up and it supersedes this shoulder. In fact, it's about twice as high as the shoulder. Not necessary, but it does have to be bigger. It could be 50% as high. It could be a little bit lower, but definitely this head, as we call it, has to be higher than the shoulder. Otherwise, we're talking about double tops, triple tops, maybe a rectangle pattern. No, head and shoulders is definitely the second portion of the pattern has to be higher than the first portion. Okay, great. Look where it comes down to. It comes down to about the same level where we retraced before. So I start to see this floor, or what they call in the pattern, the neckline. So I'm going to click there, okay? So now we've established a shoulder, the head, and where the neckline should be. Now look what happens. Market says, wow, we found support again. This is bullish. Let's go. And it trends up, and guess where it went? It went right about to the height of that previous shoulder and turned around. It got scared. Whatever happened, sellers, buyers didn't want to buy up here. Sellers say, yeah, we still want to sell. We're going to push this market down. They push it down to the neckline. Okay, once we've established the neckline, and the neckline was really established here, I'm thinking, look, if this turns around, if this, ticks the head and shoulder box, gets up here, turns around, I'm looking for a breakout. I'm looking for a breakout of that neckline. Not only am I looking for a breakout of the neckline, but I'm looking for a distance from this neckline to where that breakout could go. So let's talk about that distance. It's the measured move or the measure of, and we could do it one of two ways. To be precise, we could use the ruler. And the ruler is a great measuring tool in the NinjaTrader platform. This just takes 1 point. You click 2 points anywhere on the screen and it tells you all sorts of measurements. I click here and I'm going to click here. This is the top of the head. It tells me the value. In this market, we're looking at the Russell. It's 185 points on that index. Okay. So now I know, well, let's be precise, 185 and a half. So what can I do with that? And I'm just going to click there again to turn it off. Well, I can use that and say, if this is 185, I can subtract that value from the neckline and I can figure out a target. So that puts me way down here at 685. I'm doing the math for you. Another way you can do this, if you don't want to use the math tool, and I'll just put this back where it was. You could take the arrow line and you could say, well, I'm going to click here at the neckline and I'm going to go right up to the top, and you could actually move this. So now when I do this, and again, the annotations don't go with, I can just move this. I can grab this. Oops, got to grab it and move it. Say, okay, according to this head and shoulders, it indicates a level right at 1684.85 area. Now, do we have the same behavior that we've had in the past with those double tops and triple tops? Are we expecting a little bit of a retracement? Not as necessary, right? We saw this downward move, a little bit of a rally, and then it continued on, and it was kind of a slow burn down there, right? It wasn't immediate. But let's take a look at something else. I'm going to get rid of this. We'll remember 1685. And what I want to look at is the pattern length. So I'm going to take that path feature again, that ruler, not path, ruler. And I'm going to say, well, let's say it started when we broke the neckline here. Click there. And I'm going to say when we broke down there. Okay. That's 109 days. That's 77 bars on a daily bar. So we have two choices. We can use a date-based measure, 109 days. That includes weekends. I don't know if we want to do that. That's too hard for me to figure out. But 77 bars, I know. 77 bars. So the question is, does the market go down to 1685 in 77 bars? Well, guess what? It only took about 30 to 35 bars, not even, to get down to 1685. Where was that? That was right there. This bar. 1, 2, 3, 4, 5, 6, 7, 10, 20, 26 bars, not even 30. So that happened within the pattern length, and that's good. So head and shoulders, really interesting pattern, but it's based on those principles that we talk about. Buyers and sellers coming in, agreeing, hey, buyers get up to a certain point, establish a resistance area when they don't want to buy anymore. Then sellers don't want to sell anymore here. And then we go up here, buyers push it up a little higher. Hey, we're committed to up here. But then it fails. So where does it fail to? Nope, we're not going to sell any lower than this. That's what the sellers say. Buyers, okay, well, we'll start buying. Oh, we won't commit to this. And then the market just fails. You can have the same thing on the other side as well. You can have a reverse head and shoulders, which comes usually at the end of a downtrend and then turns into a bullish reversal ultimately. So these are a little more complex, but the great thing about head and shoulders is that measured move and you can anticipate it, right? Because we like to think of patterns. We know the pattern, we know what it would take to finish the pattern, and we know that pretty much by when the head is formed. When the head is formed, I've got a neckline. So now I'm just looking for, okay, where's the next point? The height of this shoulder, give or take, right? It can be higher, be lower. If it's higher, there's usually expectation, a greater probability that it'll break down, oddly enough, when it gets higher. So if it's a slightly higher right shoulder, let's see, camera, I don't know which one it is you're looking at, maybe this one. If it's higher, then it could be slightly greater probability it'll break the neckline. But we know as soon as it starts turning down what our breakdown target is. That might mean if we're shorting here, we might have a target, or we might have a stop if we're long, or we might just wait for that confirmation of the breakdown and then go short. So all sorts of things you can do with this. Again, past performance, not indicative of future results in the sense that it's not 100% guaranteed, but we just want these probabilities to be in our favor, just to know what we're getting into. So the last thing I'm going to go over right now are flags and pennants. What I've been showing you so far are basically reversal patterns, right? Which is interesting. We're in a trend. We want to know when it stops. We want to know when it reverses. But here's something that's more of a continuation pattern. So let me get over there. Let me see if I have that handy on this chart. Let me go back here. Nope, I don't have it. First of all, let me turn off my annotations. That would be great. Or actually, let me turn them on so I can delete them. Let me try that one more time. I'm used to like clicking on something to delete it. Let's go over to crude oil. So we're going to go to crude. I don't think I have it handy there. So we're going to just pull it up and we're going to do this from, I try to have these all keyed up and I didn't have that. Let me just get rid of these drawing objects from before. There we go. And what did I see on crude that was really interesting? Here we go. So flags or pennants. Flags or pennants are basically patterns that are continuations where when we have a trend, we start to see like a triangle form. That would be a flag. So I'm going to use let's use the path tool. So here's where I might see like a triangle forming, right? And it's not perfect. There, let me double click that. Let me extend this a little bit. Okay, great. So you have this nice uptrend, but the uptrend turns around and we start to see a downward trending move. But we have a support level here, right? So we see this test, not test, but we see where it doesn't go any lower. Tests here, tests here, tests here, tests here, tests here, tests here. And so then it breaks out to the upside. Now, it doesn't mean, I also see kind of a head and shoulders pattern that's really compact here. So it could have easily broken down just as well. But this is more of a straight line rather than a shoulder. So you could argue that. But here's the point. This move here to the head can be used, to the head of the flag, can be used as a projection for here. So how do we do that? Well, I like to, again, use that arrow. Say, if we were to measure this move to the top of the triangle, so the start of the move to the top of the triangle, then we can use this. This time I'm going to copy it and paste it so I can just take a copy and say, where's that breakout area? This is what it's indicating, okay? So we measure this move to the top of the triangle, the flag, and we say, okay, when it resumes the trend from wherever it retraces to down to this bottom of this flag, then we're going to use that as a guide. Now, did we get there? No. This indicated about 95.06. We got to 94, about $1 short. But you don't know that during this trend. You say, wow, if this breaks out, then we could have this move all the way up here. Did we get there? No, but that's not a bad move, right? That's about a 18 handle move. You're expecting 19. That's not a bad ratio, right? If you think the market's going to go 19 handles and it only goes 18, it's probably still want to take that trend. Again, this is a longer trend. This is a daily chart, but you can use this on intraday charts as well. Now, the difference between a flag and a pennant is a pennant is more perpendicular. It's more of a rectangle shaped. So if you had an uptrend and then you had a trend channel down and then a resumption, you could almost draw this the same way. Forget that triangle I'm drawing. Let's get a trend channel going, right? And so I've got a trend channel that you could say, here's the resistance level, here's the support, and then, but the concept is the same, right? The concept is the same. I measure this trend and I add that distance in the vertical, the price distance, to the breakout. The breakout's roughly the same place. So pennants and flags, in this case, it would have been pretty much the same thing, but they can be different depending on the size of the pennant, the flag. So that's a pretty good introductory, I think, it's a good introduction to technical analysis patterns. Generally, we like to think of reversal patterns like double tops, triple tops, head and shoulders, cup and handle, but we do have these continuation patterns as well, flags and pennants. Coincidentally, and this might have been in the back of my mind when we were thinking about this show, we had Platforms Unleashed with Jim Cagnina. We added Technical Analysis Explained. That's the same title as a really good book by Martin Prang that goes over pattern recognition, that goes over these patterns. He does a much deeper dive into the probabilities that are associated with each pattern, the nuances, and how they affect those probabilities. So if you ever get a chance, you want to learn more about technical patterns, we do have, there's Martin Prang with Technical Analysis Explained. Jeremy Duplessis does a great job with patterns in point and figure charts, a completely different topic that we might take on another time. Candlesticks have their own patterns, right? Steve Nissan wrote 2 great books about that, about candlestick patterns. So there's plenty of material out there, and that's just scraping the tip of the iceberg. Those are just three people I've met or worked with, and they've written these books. They're great, but there's certainly so much more to read about that. So I want to thank everybody for coming. We'll finish the day with Mike Burke at Bar's closing, but in the meantime, have a great trading day.